Hello and welcome to AI Market News by LM. Just when we all thought we had a handle on things, when the market seemed absolutely certain that rate cuts were on the horizon, well, the Federal Reserve just came in and flipped the entire script. The whole conversation has changed, and we're now forced to ask a shocking new question. Could the Fed's next move actually be a rate hike? Okay, so let's get right into this. For months, the whole story was about when the Fed would cut rates, not if. That was pretty much the gospel on Wall Street. But then, the latest FOMC minutes dropped, and wow, they added a plot twist nobody saw coming. And there it is. That's the key line, right from the official record. This isn't some subtle hint or a vague warning. This is an open discussion. We're talking about Fed officials seriously considering the need to raise rates again. This is a huge, huge shift, especially when you think that just a little while ago, it was all about how to plan for those cuts. Right? This is the question that's now bouncing around every trading floor. It just completely turns the conventional wisdom on its head, and it forces the markets to suddenly price in this new, kind of scary risk that honestly wasn't even on the radar. So let's take a look at how this all played out in real time. The reaction was, well, it was fast and it was fierce. When the Fed so much as whispers the word hike, the entire world listens. And let me tell you, the markets acted in the blink of an eye. So the very first, most powerful thing we saw was a massive spike in the US dollar. Now, why does that happen? It's pretty simple, actually. If interest rates might go up, it makes holding that currency, the dollar, way more attractive for global investors. They're chasing a better return. And we saw a textbook example of that play out in seconds. And this slide right here gives us the visual proof. Look at that. This is the dollar-yen chart, and you can see that crazy sharp move upwards the second the news hit. The dollar just flexed its muscles against the yen, smashing through key levels in just a few minutes. And this table here kind of shows us the ripple effect across the board. It wasn't just the yen. The dollar strength pushed the euro down too. And at the same time, check out the US 10-year Treasury yields. They jumped up, which tells us the bond market is now taking this whole higher for longer idea very, very seriously. So we've seen the hard numbers, the charts going up and down, but what about the feeling, the psychology behind all of this? A shocker like this can really change the mood for investors. So the big question is, are we seeing a rise in fear, or is there still some greed left in the system? A great way to get a pulse on this is to look at the Fear and Greed Index. It's a really neat tool that basically bundles 7 different market indicators into one simple number. It helps us see if fear or greed is the main driver and whether investors are starting to panic or maybe seeing this volatility as a chance to buy. Yeah, it looks at the whole shebang. Everything from market momentum and volatility to whether people are buying risky junk bonds or running to safer assets. So what's it telling us right now? Well, the index is kind of hovering in that neutral zone. So while there's definitely some new caution in the air, it doesn't look like we're in full-blown panic mode, at least not yet. And all of this leads us to the main event, the central conflict that's really defining the market right now. We've got a huge split between what the Fed is saying and what some really big players are betting is going to happen instead. In one corner, we have Team Hike, led by the Fed officials who are talking openly about how worried they are about this sticky inflation. But in the other corner, you've got Team Cut. These are the traders in the high-stakes options market, and they are putting down massive amounts of money on bets that the Fed will have no choice but to cut rates by the end of the year, despite all this tough talk. It's a classic standoff, the Fed versus the market. And here's the evidence for Team Cut. This chart shows what's happening in SOFR futures. Now, without getting too technical, these are basically bets that are tied directly to the Fed's own policy rate. It's where traders are putting their money where their mouth is. And what we see is a ton of bets being placed that expect lower rates down the road. They are directly challenging the Fed's news story. So what happens now? Where do we go from here? Well, to figure out who's going to win this debate, the tough-talking Fed or the hopeful traders, we just have to watch the economic data like a hawk. As we can see from this information from investing.com, the focus for the near future is all on jobs and housing. That initial jobless claims report, it's huge. A weak number could mean the economy is cooling off, which would help the argument for rate cuts. But a strong number, that would just prove the Fed's point about inflation. We also need to keep an eye on things like home sales and consumer confidence to really get the full picture.
And that really leaves us with the billion-dollar question, doesn't it? We have a central bank putting rate hikes back on the menu, and it's clashing head-on with the market that's still betting on cuts. The upcoming data is going to be the referee in this fight, and sooner or later, somebody's going to have to blink. The question for all of us is, which side will it be? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.